your mortgage. Sounds like a great thing if you can do it. Stewart Welch is here with the answer of should you do it. Depends on where you are in life, right?
Well, it depends on your circumstances. So we do see a lot of people that are making advance payments on their mortgage and in an attempt to pay it off early. And the question is, a lot of times they're making a mistake doing that.
Why is that?
Well, for example, let's say you're paying $200 a month extra against your mortgage when you still owe credit card debt. So you owe credit card debt at say 18%, and you're paying off a mortgage that's, you know, maybe at 3.5%, 4.5%.
So you're digging a hole over here while trying to pay off the big
Yeah, and it
one.
just doesn't make any mathematical sense. So a lot of people have a big interest in paying off their mortgages because there's a lot of fear around the stock market, and you know, and you can make a case for it. So if you've got piles of money sitting in money market accounts earning 1%, or sitting in CDs earning 2%. And you've got a mortgage, even though it's a great rate. So 15-year rates are under 4%, 30-year rates are under 5%.
It's incredible, isn't it?
And it's been down for a long time. So the question is, does that make sense? And in some cases it would. But you have to analyze it. And so I think the whole point of this is, don't just take the knee-jerk reaction is, I'm going to pay off my mortgage. Make sure you analyze it in the context of your personal facts.
So someone who has credit card debt would be better off paying what their mortgage is, putting that extra money toward the credit cards is what you're saying.
That's exactly right, because they're paying 18%, or maybe even if they've got a good rate, 11%, they're still paying a lot more on it.
All right, a lot of folks say, I keep my mortgage, I don't want to pay it off. It helps with income tax when income tax time comes around, but you said it depends on where you are in your mortgage, whether that helps.
So if you're at the tail end of your mortgage cycle, let's say the remaining third of the mortgage cycle, then most of what you're paying actually is going to be principal. And so you're not really getting a big interest rate deduction. So that would kind of lean you in favor of taking cash resources and paying down your mortgage. And I think, Janice, ultimately being completely debt-free is a great idea. And if paying off your mortgage gets you debt-free, then, for a lot of people, that is actually a really good idea.
But if you're not debt-free by paying off your mortgage, pay off the other first is the bottom line.
Probably because you have higher interest rates.
Wrap up in a few seconds. A lot of people considering refinancing right now because of the interest rates. Is that a good idea to move it to a 15 years since things are so low if you can?
Yeah, I do think so. So you take a look at what your current interest rate is. If there's at least a 1.5% spread, you're a really good candidate for a refinance.
Don't refinance for another 30 years just to get a lower payment.
Well, even if you did refinance for another 30 years, that might make sense, and you could accelerate your payments assuming that you don't have any other debt. So it does make sense. Just take a look at it in the context of your personal facts.
Easy to understand.
Thank you.
Even for me.
Thank you.
Thank you. Stewart, good to see you. All right, let's check in with